Michael Burry, former neurologist and founder of Scion Capital Fund, is known for predicting disasters and warning the public, hence his nickname Guru. Burry is an investor who thrives on predictions by betting against them. The investor hedges his investments by basing his choices on the concept of a good margin of safety, and considers himself a value investor, making his bets carefully and intelligently. His pessimistic predictions warn and generate fear in the companies he names, as they are usually true. Michael Burry says Americans are living on their savings and America is on borrowed time. The Wall Street guru says the numbers are not good and recession is just around the corner. Michael Burry, long ago, earned his guru nickname by predicting major disasters that raised his fortune by capitalizing on them and betting against them. Now, with the rising rate of inflation plaguing the US, Michael warns the population that US citizens are raiding their savings, and that the US economy is being propped up by their savings, eventually running out of cash in a few months and incurring debt. The same for the state? In a tweet he deleted, Burry attached a graph showing the numbers that led him to his conclusion. US personal savings have plummeted from more than 25% of GDP since spring 2021 to around 3.8% today, and are on track to hit an all-time low of less than 1.5% by the end of this year. Quote, "The chart represents total US personal savings over GDP," he wrote. The crisis brought on by the COVID-19 pandemic in 2020 and part of 2021 is coming to collect its favors. Michael says people benefited from stimulus checks issued by the Trump and Biden administrations, and wonders how they could replenish that money now that inflation, rising interest rates, and falling asset prices are devastating household finances. How to take advantage of it this time? We have already talked about the events of this infamous decade. A crisis in the US real estate sector that led to the bursting of the housing bubble in the United States in 2006, which was exploited in October of 2007 by the subprime mortgage crisis, transferring it to the US financial system and subsequently to the international financial system. But what really happened? The real estate sector was lending to people who could not repay the debt in the medium term, in reports of bonds linked to mortgage loans that long before the crisis, people were already carrying debt. Burry pointed out that this was a bubble and predicted that it would burst in 2007. Looking for a way to profit from this situation, he convinced two large banks to issue credit default insurance, CDI, and sell it to him. Thanks to this big bet, recorded in the movie The Big Bet, at the outbreak of the great subprime mortgage crisis of 2008 to 2009, Burry earned for himself and his investors close to $1 billion, becoming the guru we know today and rising to fame. It seems that the investor has a good eye for misfortune and knows how to take advantage of good opportunities. Although he will not develop it, he is surely already taking precautions for the crisis that he himself sees coming. Many Americans, perhaps blinded by old bad memories, fear that the 2008 crisis will happen again. And in fact, not only the Americans, the whole world, because at that time, the first thing was the bursting of the real estate bubble. Then it was the decline of the US financial system to spread to the international financial system, causing liquidity crises and triggering large-scale economic phenomena that subsequently had repercussions. The fall of the US stock market, and then of the world stock market, leading to unemployment and starvation. Some say it will not happen again, because the US government has made changes and taken precautions since the last time, implementing economic policies to address the failures of that time. It's a similar situation that puts many in a bad mood though. The investor recorded, quote, "As I said about 2008, it's like watching a plane crash," he tweeted. What do you think about the situation in the United States? Leave your opinion opinion in the comments. Predictions of recession and high inflation in the US make the future of the stock market uncertain. Lately, rising interest rates have caused the experience of companies, especially technology companies, to suffer. Day-to-day life is tough on Wall Street, with the changes that week by week modify the whole panorama, and investors are on the verge of losses or successes, betting on companies and using all resources to guarantee their profits, because what is good today can fall tomorrow, and if it falls, it takes you with it. In the investment world, you should not get attached to any company, he recommends, to the extent that Burry divested from Apple this week, leaving only 6 companies in his portfolio. Not so Warren Buffett, who has a large part of his portfolio betting on Apple, the darling of Berkshire Hathaway. We will not know who will win the bet. May the best investor win. The Standard & Poor's 500 Index, also known as the S&P 500, is the most representative index of the North American stock market, and is the most important because it can reproduce the true state of the market. It is the stock market value of 500 large companies listed on the New York and NASDAQ stock exchanges, and reflects 80% of the entire US market capitalization. If the S&P 500 index goes down, it indicates that the weighting of the companies that compose it have lowered their stock market value. Low, Wall Street is in a bear market, so the shares are worth less. It is an indicator to sell the shares you own, because they may continue to fall. Buy those that will rise again soon. Morgan Stanley, also making their predictions, indicate that the bear market on Wall Street will only end when we see the S&P 500 adjust its variation levels to a new scenario of lower corporate earnings. Among their forecasts, they expect world stock markets to trade in a sideways range over the coming months, and anticipate that the S&P 500 will trade at 3,900 points, close to current levels, in the third quarter of 2023. Although, during that time, they do not rule out, quote, further sharp declines below that price. Investors never really lose, as they know that in the stock market, the value of a stock goes up and down depending on the intrinsic value of the company and its bottom line. Not so with meme stocks. Michael Burry was part of the meme stock craze, so called because meme stocks suddenly gained popularity on the internet, increasing their value. These stocks are driven by individual investors on platforms like Reddit, where their value skyrockets only to collapse without warning. You have to get your money out first. Michael Burry says the US stock market appears to be following the pattern of previous bubbles, preparing it for collapse. Quote, stocks will suffer the mother of all crashes. The guru's predictions often skew the truth, and his actions are not off the cuff. There are also clues to draw his own conclusions: inflation and current rates. Does anyone really know if the situation will improve? Currently, the reality speaks for itself. People are spending their savings in the US to pay for their day-to-day life, and at some point it will end, causing the dreaded recession that is expected and will happen soon. Will his disciples pay attention to the guru? And here we are with today's video. I hope you liked the information we've provided, and that you found it useful. Thank you very much for joining us. See you in a future video with more news about the business world.